Good afternoon and welcome to our quarterly pet insurance price index, where we'll be looking at price movements in pet insurance over the last quarter and looking back a little further to see how things have been progressing. First, a little bit about Pearson Ham. So our mission is to help our clients succeed through better pricing, and we do this in several ways, whether it's capability development, looking at pricing strategy, processes and governance, data, analytics, systems and tools, predictive modeling, price optimization. We can get in and we can help and improve pricing performances. One of the things that we do in insurance is market price tracking, and that's what we'll be looking at today. A little bit about the methodology. So we have panels of consumers, so these are real people, and we run their details through price comparison sites every day. So we have agreements in place with the big four UK comparison sites, which enable us to do this. We then conduct data cleansing to make sure that what we're reporting are genuine price movements and not caused by the process itself. So there are a number of pricing rules in place which could cause prices to move because of the methodology that's being applied. So we want to report price changes which are actual changes rather than movements which may be caused by the activity itself. The panel rotation is in place to replicate genuine customer behavior as much as possible. So we want to extract prices that will be the same as customers will see. So using the same approach as genuine customers, we create metrics that we share with our clients. We've got daily reporting. We use an online Tableau portal, which our clients are able to access, and we send out daily reports and supplement that with insights sessions. We're live across a number of insurance sectors currently, so car insurance, home insurance, van, pet and travel. So today we'll be looking at pet and how prices have moved there. On the approach, we always use real people, so it's genuine customers. So this is in case there's any data enrichment that's taking place in the background, and it has to be real people. Otherwise, prices may not be accurate that come back, and we always do it with consent. So we are only scraping prices from websites where we have written agreements in place to do that. So we don't have any risk of breaking terms of use. So that provides us with some comfort, both in terms of pricing accuracy and any potential legal implications. Okay, so I shall hand over to Frances now, who will talk through some of the price movements that we've been seeing in pet insurance over the past quarter and over the past year or so.
Well, good afternoon, everyone. Nice. Let me take you through some of the trends that we are seeing in our tracking over the last quarter and how that adds up to trends over the last 12 months. So following on from some decreases that we saw in Q1, we've seen top prices have put in steady increases on all 3 months of Q2. So sort of increases of anywhere between sort of 0 and top of 0.7%. This is at the lowest level of cover for lifetime. So overall, that puts the increase for the quarter at 1.4% for the top average prices. And then how that lines up since the start of the year. So the first half of 2024, we're essentially netting out to flat in terms of prices on pet insurance. So that's a small increase happening in Q2, balances out the decreases that we saw in Q1, particularly from March 2024. So overall, for the first 6 months of the year, change is minimal, only 0.4% in the first half of the year. And then again, going back a bit further, so this is now a 12-month view. So it's interesting the pattern it creates when you're comparing sort of 12 months ago to what we've seen in 2024. So the second half of 2023, we saw month-on-month increases. You can see sort of from July all the way through to January of 2024, we've got month-on-month increases. We've got a peak around February of 2024. But then the sort of the second half of this chart on the right, you can see it's much more scattered. It's less consistent in its trends. So generally smaller bars, sort of above or below 0% for the last 5 months or so. Overall, though, we are still netting an increase year on year. So that's 12% for the top 5 average prices year on year growth since July last year up until June. Cool. And then looking into some segmentation that we see sort of in the pet pricing that we track. So again, if you tuned into the webinar in Q1, we saw sort of a fair amount of difference opening up between pricing for cats and dogs. You can see since then, so in Q2, those lines have come a bit closer together. So decreases in March were stronger on dogs than they were on cats. Since then, they've been much more closely aligned between them. So that gap has narrowed. So it's now really between 11% and 12%. It's quite closely matched year on year for cats and dogs. Obviously, everything we've been talking about so far has been lifetime. So you can see it's that yellowish line at the bottom is lifetime premiums over the last 6 months. Taking a look at other cover types, so max benefit, time limited, we are seeing stronger increases there. There are generally fewer prices appearing on a results page, so there's sort of less competitiveness on prices we find with max benefit and time limited. So they have increased sort of between 8 and 12% over the last 6 months. Like I say, with the lifetime is largely flat since the start of the year. And then looking at other segments, so bringing in region, if we go back to lifetime pricing, over the last 12 months, obviously 12% is the average, but there's quite a wide range there between pricing for different regions. So particularly sort of trending along the top, we see Northeast premiums for pets living in the Northeast have increased at the highest rate over the last 12 months, particularly with a sort of a surge between sort of September and November, where we see much higher rates of increase for quotes for risks in the Northeast. Scotland too as well is sort of just below that, sort of higher than other regions in England. We see premiums are increasing at a greater rate for Scotland. London, on the other hand, is nearer the bottom. So again, this is price change over time. So London, we've seen less change over the last 12 months, but that still doesn't change the fact that London is still the most expensive region for pet cover overall, closely followed by the Southeast. And then splitting out cover levels. So again, everything up to now, we've been talking about just the base level of cover, starting from £1,000 in vet cover. Splitting that out between sort of £2,000, £3,000 up to £5,000 of cover and more. We do see slightly different trends. Those decreases in March were very much strongest on the lowest level of cover, but didn't impact 2K plus as much. So we see that the higher levels of cover have been trending slightly flatter in Q2, actually sort of less increase than what we've seen on 1K. In fact, you can see there that's 2K or more that decreased slightly in June. So we're seeing much more sort of fluctuation in trends on the lowest level of cover, but growth has been relatively stagnant in Q2 for higher levels. Again, by age groups, this is the age of the animal in question. So the lowest level of growth that we're seeing is for the youngest animals. So again, over a 12-month period, again, the average for this period is 12%. But over a 12-month period, we actually see that sort of animals aged under 1, premiums haven't changed very much at all, only 2% year on year. And actually that increase is coming from older animals, in particular in Q2. You can see it's been strongest on animals aged 4 to 6, as broken away from a closer alignment sort of back in Q1. And then by animal type, so we've covered this chart before. You can see there is that step up in October. We can see that the reason for that was related to change in the journey on Compare the Market. So our data is based off of prices that we're collecting from the price comparison site. So a change in the journey on Compare the Market meant that users were able to input the mix of breeds that go into a crossbreed animal, whereas previously crossbreed was just a binary selection. So obviously that's a realistic change sort of out there in the market. If customers are buying insurance to Compare the Market, that will have impacted the prices they're seeing. So that's a sort of a genuine shift in pricing, even if it is caused by a change to the UI on a website. But that is why we see a step up in crossbreeds back in October of last year. So that's moved the line further apart. But generally, as we get to more recent trends, sort of Q2, looking at April through to June, again, those lines aren't diverging too much in terms of trend. You can see insurers are sort of loading rates sort of similarly based on pedigree, mixed breed or crossbreeds. Nice. So looking at the competitive landscape that we've seen over the last 6 months of the year. So what we're looking at here is the insurers that are most likely to appear in the top 6 ranks for the lowest level of cover. So this is from vet fee level of 1,000 or more. So for example, if we collected 100 results pages, 83 of them would have insurer 1 appearing somewhere in that top six ranks. So we can see that sort of in the lowest level of cover, and the lowest level of cover, there are 2 insurers that are really dominating. So they've got an equal share between them, insurer 1, insurer 2, both equally likely to appear up there in the top 6 positions that an individual will get on a results page. Below them, there's sort of much less concentration, but we can see a few brands have popped up in the last 6 months, so sort of from the start of the year to where we are at the end of June. We can see sort of insurer 6, for example, and insurer 15. Price decreases have meant they are more likely to come within a sort of a competitive distance with the top of screen. If we increase the cover levels, so sort of replicating how a customer might say, I need to have cover from a higher level. So going from 2,000 or more, we can see those shares change a little bit. The insurers move around. So we've kept the insurer names like for like between them, so you can see how they move when you change the cover levels. So the concentration is much more varied. You can see there are many more insurers making up that top 6. It's not so much of a combination of insurer 1 and insurer 2. We can see insurer 7, obviously they were 7th ranked on the previous board, are now the most likely to appear in the top 6 there. We've also got some other insurers there as well that ranked quite sort of low on the share of 1 to 6 for the lowest level of cover, but are much more competitive when you go up a level to 2K. And then if we look at sort of the midpoint here of cover from 3K or more, you can see actually at the top there, you've got a brand that doesn't even rank when you've got the lowest level of cover selected. So if you're looking for cover for 3K or more, then actually there's a sort of some brands come out from nowhere. You wouldn't have seen them in the top 6 for 1K cover. But again, you've got a much more spread out concentration there. There are a good few brands that have got at least a 1 in 5 chance of appearing in the top 6. And again, you can see there's been some change there. A lot of these ranks are similar to the start of the year, but there's a few brands that have been taking on some significant price changes over the last 6 months, and so are much more likely to appear in a consumer's sort of viewpoint than they were in January. Interestingly, if you toggle between this one and the next one sort of at speed, you can see the differences. So the brand that was at the top on the previous slide is now not competing when you get to 4K or more. So they don't appear in the top 25 for this level as well. So again, you get quite a switch around in the brands that do well at a sort of adding an extra 1,000 to vet fee levels. You can see Insurer 1, Insurer 7 are still competing with each other as the greatest share. They are sort of up there in the top, I think, 3 or 4 for every cover level, apart from the lowest level. So they are sort of the most competitive that we see appearing in general at every cover level. And then lastly, the highest, again, Insurer 1 and 7 have also got similar chances of being within a competitive space at the top of the screen. Again, Insurer 6 there that we see have climbed a significant number of ranks since the start of the year, with prices decreasing by about 26% in the last 6 months. And again, you can see here, if you're sort of looking at the numbers, so obviously the number we give them corresponds to how well they perform on the lowest level of cover. You can see there's still a fair amount of crossover. The brands that are likely to appear in the top 6 for 5K are also likely to appear in the top 6 for 1K as well. So there's still a fair amount of crossover between the lowest and the highest level of cover. And that brings us to the end of the competitive landscape. Just to round up on some news stories that have come in the last quarter since we last had a webinar. So since then, the CMA has announced it's going to go ahead with an investigation into fees in the vet sector. So there's sort of back when we had the last webinar, they were sort of doing initial findings, deciding whether it was worth proceeding with a full-scale investigation. That has now gone forward, so that's in process now. So that, I assume, is going to be ongoing for possibly some time. Outcomes of that could be sort of mandates to give more information to customers, to encourage vets to cap prescription fees. There may also be a move to break up some vet chains in the market as well if the CMA thinks that the market has gotten too concentrated. I think there's been a lot of takeovers between vet chains recently. So that still could be ongoing. That's probably going to throw sort of vet fees and sort of by association pet insurance into the limelight while that's still happening. So expect some media attention on the cost of pet care for the rest of the year. Okay, good. And then just lastly, sort of in March as well, has become sort of legislation has come in to make it mandatory to microchip cats as well. So that's something that that's happened in the last quarter too. So that will also impact sort of pet owners and may also sort of improve sort of handling of pet care. If pets are easier to find and relocate, then that will also have a knock-on impact on sort of visits to vets and sort of by association pet insurance. Excellent. That brings us to the end of the slide. Stephen, did you have any questions, or does anyone on the chat have any questions that they'd like to post sort of after seeing those slides?
So we've had a question come in around the regional pricing. So do we have any answers to why northern regions are increasing at a higher rate? So I think it may take us back to the news article about the CMA. So the kind of pet insurance pricing is going to be driven by costs, and those costs will be mainly driven by the pricing of vets within particular areas. So if we're seeing that there are greater concentrations of larger vet chains, so this is the issue that the CMA are investigating at the moment, is large vet chains coming in, buying up independents, reducing competition within those areas and pushing up prices for customers, which ultimately will be covered by the insurers. So it may be the case that we're seeing a greater concentration of those larger vet chains and a reduced competition within some of those northern regions. So that could account for some of the increasing costs that may be being experienced by insurers, which in turn could be pushing those prices up at a faster rate than some of the other regions. So whether that's an answer or not, it's a hypothesis. So that it's a potential that could be driving that. Got another around how do you see prices moving for the rest of the year? So again, it's quite difficult to say. So we saw some big increases last year, some reductions at the beginning of the year. They kind of leveled out a bit. So things appear to have stabilized in the first half of the year. Whether that continues, we may see a bit of a kind of stabilization over the next quarter, and prices may kind of come up a little bit again towards the end. You know, it's obviously it's very difficult to say, but given the increases that we've seen in prices, with the potential actions that could be taken by the CMA, which again could lower costs within the market, I think we may be seeing insurers kind of waiting to see what's going to happen there. So there's a potential for costs to start reducing if some action is taken in regards to the reduced competition and the larger chains. Okay, I think that's all the questions that we've had in today. So we will be sending out some slides following this, and a recording of the session should be available on our YouTube channel. In the meantime, if you do have any questions that you think of after this, then please do feel free to let us know. Reach out to myself or Francis, and we'll be able to answer any questions that you might have. Or if you need any more information about our services, then please do feel free to let me know. Okay, so we shall say goodbye and look forward to seeing you next time.